So you're looking to buy a home in 2024, but you're self-employed or you're just not a W-2 employee. Maybe you're a 1099, you're a subcontractor, or you're doing work for hire, whatever, commission-based, whatever it may be. You're not working the typical 9 to 5 and you don't have your taxes already taken out of your paycheck. So that's what this video is about. Is it impossible to buy a house? What are the things to look for when you're buying a house and you're self-employed? We're going to dive into that. So if you're new here, my name is Ryan Henze. I run the Top Hat Connections real estate team with my mother, Karen.
Hi.
And she used to be in a lot of videos for a while, but she was like on a break there for a minute. But she's back with me today for today's video. And we would just love to help you, whether you're looking...
Mom, moment.
What?
Ryan is doing such an awesome job. I hope you're enjoying his videos because he's sharing a lot of good stuff.
So thanks, Mom.
Had to say that.
If you guys are new here, we share living in Tulsa content, real estate content, all that good stuff. So be sure to like and subscribe for more of that if you're interested in that. And of course, if you're looking to make a move to Oklahoma, whether it's now or in the future, we would love to connect with you and help you make that smooth transition. So without further ado, let's jump into today's video. So one of the biggest things with self-employed people is your taxes. Right now, it is tax season, so this is a very timely video and why this topic was chosen. So when you are filing your taxes, you need to claim enough money to be able to qualify for a home loan, because most self-employed people, it can be a bit frustrating when you're trying to buy a home because I make enough money to buy a home, but then nobody's approving me for a loan, and it can get really annoying.
Very frustrating.
Yeah.
Very frustrating.
So some options available to would be, the most simplest one is go to a lender right now. We have great lenders we can connect you with and talk to them and say, hey, I'm self-employed. This is how much money I make. How much do I need to claim on my taxes this year to be able to then buy this home that I'm wanting to buy? Whether that's a $350,000 home, $400,000 home, whatever it is, you need to know how much money you need to be claiming on your taxes to be able to then purchase that home. And the difference between the claiming taxes versus doing a different type of loan is typically if you could qualify for the traditional, conventional FHA, those types of loans require that the income on your taxes. And so with those loans, you get a better down payment options, maybe a little bit different interest rate. Whereas if you don't do that, and you just do like a straight loan from maybe your bank and things like that, sometimes you can have higher interest rates, or you could also have, what am I thinking of? Not interest rate, but down payments. So like if you don't qualify for the FHA conventional because you're not claiming enough money on your taxes, then you could be stuck paying, 10 or 20% on your home versus the 3.5% or 5%, which is, a lot better deal if you can qualify for that loan.
That's why it's so important to talk to a lender, because you need to be thinking of this in advance. If you have that time, it's good to talk with the lender so that you know exactly what it is that you have to do to make it look like you're making money on your taxes. And that's the ticket to getting the house you want.
Definitely. A lot of people, buying a home for a self-employed person definitely needs to be more of a strategic game, because it's just like your taxes. A lot of people that are self-employed work with tax strategists because it's like, well, maybe I should buy this because I need to deduct this much, and I need to invest in this because I got too much taxable income and all this stuff. It's the same with real estate for self-employed people. So you got to work very closely with a lender to know exactly how much you need to claim on your taxes, so that you're making enough money on paper to then qualify for the home loan, because it's going to be a better deal all around to qualify through the traditional route versus the, self-employed. Obviously putting down 10 or 20% is a lot more money than a 3.5% or 5% down payment.
Right.
For clarification, there are certain loans that have different income requirements. For example, with an FHA, I believe you can't go over like 43% debt to income ratios and still qualify for the 3.5% down. So that's what I'm saying is self-employed people, we don't claim enough money on our taxes, so it looks like our debt to income is really high. So that's why you have to work closely with the lender to make sure you're claiming enough on your taxes to then not have a debt to income ratio that's completely off and not be able to qualify for those loans that have the lower down payments. Obviously, full disclosure, we're not lenders. We are real estate agents, and this is just information we have heard over the years from our lending partners. So, of course, if you are self-employed and looking to buy a home this year in 2024, be sure and connect with us. We'll get you connected with a great lender that will help you look at all of your options and put a game plan in place for making you a homeowner or just buying another home in 2024. So, hope you have a good one. Of course, like and subscribe for more real estate tips, tricks, and information, as well as local Oklahoma content. And we will see you in the next video.